Welcome to DF Markets Harmonic Patterns. Harmonic patterns are a more advanced form of technical analysis which combines symmetry, Fibonacci retracements, extensions and market structure to identify specific patterns and reversal locations. The key patterns to focus on are as follows. Gartley pattern. The Gartley pattern is the classic harmonic pattern to know and signals a reversal from the D point. Price moves from X to A to B to C to D. In each pattern, the retracements and extensions labelled must line up for the pattern to be valid. Butterfly pattern. The butterfly pattern is more of an advanced pattern because instead of the pattern completing inside the initial price swing, X to A, the pattern completes above the X to A leg. Again, price moves from X to A to B to C to D, which is the final reversal point. ABCD pattern. The ABCD pattern utilises the two core concepts of harmonic trading, symmetry and structure. The pattern is essentially the same as the corrective structure of the Gartley pattern, but notice how there is no X to A leg. This time price moves from A to B to C to D, which is the final reversal point. Bat pattern. The bat is another harmonic pattern, similar to the Gartley, as the pattern completes within the initial X to A leg. As this pattern's reversal point is so near the top of the swing, which is a typical area used to place stops, the pattern offers great risk reward. 5.0 pattern. The 5.0 pattern is quite a unique harmonic pattern due to its structure, which involves an extension from B to C and then a retracement from C to D, which is the final reversal point. This pattern is often found at key trend change locations and can be a great way to capture a reversal.